Hello guys, in this video I'm Joel XBT and today I'm gonna do a live educational video. This will be short stream. I will record and will upload to YouTube. And I will talk about open interest. This is a great tool combined with GBT that you can exploit and know to understand what's happening on any level. So here first of all, we're gonna go to the charts. We have again ATAS, and here we can see some information. Here we have a chart. I'm gonna zoom in and I'm gonna show you what's happening. Here we have this blue and red chart is open interest. So what to know about open interest? Open interest is match contracts open and match contracts closed. So when we are opening contracts on the way up, we are opening longs. When we are opening contracts on the way down, we are opening shorts. So you need to know how much open interest on a candle is being opened in order to know if there are opening longs on the top or they are closing longs on the top. In order to see this, you could see it with open interest. We have this red open interest candle. In this candle, here a lot of shorts that were absorbing this price got puked out on these highs, and then open interest now is again increasing, but price is going down. So shorts are opening again. But here some price, because red delta is being popped here, so some of these shorts got out and now they are refilling their shorts in order to find a continuation from this level. So here you see these 30-minute candles, a lot of wicks, price is getting absorbed. This is something that is easy for the eyes to see. They are letting a lot of longs on the top trapped, because there's not only shorts peeling in, there are also traders that are thinking that we are going higher and they are trading breakout, so they are long in the top and price is getting absorbed, and market shorts and limit shorts are absorbing this price. But once these are filled, sometimes this wick will create some short of shorts getting covered because they getting stopped. What happened this time? They short here, they leave here their stops, they try to push, they push market buys, they left market buy stop, also they trapped shorts and they left them out the game, and this is what happens. So I'm gonna give a brief example with an image I have for you guys. This one no. Let me search for you guys. Okay, let me have, where are my image? Okay, here you go. So let me explain for you guys. This is open interest profile. So open interest, you have new longs opening. So when they open, okay, they open and you see new longs opening. When you see price breaking a level and you see the profile of open interest having some sort of closeness, are longs in profit, taking profit. When you see most of new longs on the top, and then those longs getting in trouble, getting underwater, and then comes the expansion. This is a good explanation of what happens in price. You have longs opening on the bottom, you see longs closing here, and then if they are new longs here because price starts to go up, if you have something like this, let me my pinturillo, and you start seeing price going up, accepting these prices, open interest increasing, new longs on the top, new longs here open, price starts to absorb again here, when price here, all these new longs that open price here will be underwater. So in order to you to see this acceleration but you see absorption at the same time, once you see that level is being absorbed, like here is being absorbed, all the longs that were opening here, once the price is here, will be underwater. Okay, sorry, my spelling is hard with the mouse, but you understand. So once the price starts closing under these longs that open here, thinking price is going up, all these new longs that try to trade this type of breakout, when price starts falling here, that will be an expansion, and price and those longs will be underwater and will create a cascade of closing longs, and this open interest will decrease, same as delta. So, okay, so you need to understand that when you see open interest, let me put a text for you guys to explain this. OI plus price, okay? OI, price, and price goes up, OI up, and price up is bullish. Then, let me change this. Where is text again? OI minus, but price up, bullish, because stops, shorts, longs, TP. Okay? So you need to think these two concepts that can happen. OI increase, price increase, bullish, open longs. Okay? OI decrease, price increase. So OI is going like this, price going like this. What means? Longs are getting TP, shorts are getting squeezed. Okay? That's why I really have in consideration delta, because you have to see how open interest increasing, delta increasing. OI plus CBD plus bull. OI plus CBD negative bear. Okay? So this type of concepts is something you have to have in consideration once you're trading and once you get into a zone. So in order you to have a real explanation, I have talked a lot with my friend Victor, and we was discussing this. And you have to know sometimes there are divergence. Also, this can act like a stochastic. Let me see if I can change it for you guys. And my CBD candles, I will put it like a line, and you will see. Well, I didn't change it. Let me see if I can change it again. I will put it like a line. It's easier for you. So now we have CBD as a line. So let me find for you a divergence. Once you have this type of diffs, because this opens in session. So here we have the opening session, and we have new high, lower low, but price didn't lower low. So here you can have an example. This candle was higher than this one. No, sorry. So you have, here is more extended. You need more price to see it, because here is a weekend and it's nothing reliable. But here, for example, here, open interest and CBD, you have these highs, and then you have this high is higher, but CBD is lower. So then let me mark it for you guys. You have this type of divergence and this type of divergence. That's a diff. And that's a bullet diff, because higher price, lower CBD. So price tried to nuke into a Bula div, because this is Bula. This is Bula. They continue Bula div for the session, how I told you all the time. So everybody that tried to short and try to short these lower parts, they're trading into a hiding Bula div. I know the regular div is bearish, but extensional div is bullish. So here they continue being on a bullish trend. So here it was also accelerating. Here we have a consolidation in open interest and people buy here. And this. So guys that shorted when the re-entry on the level were okay, but if you don't TP here, you had a good, but you wanted a full TP, you got burned. This is happening every New York session this last week. So in order you to see CBD, you have to see extended ones. So here also you have higher, and this one is higher, but if you extend this, yes, this one is regular because it's nothing, there's no div. This point is higher than is lower than this one, so nothing. And you can find it here on the way down also. So here, let me explain. This point, higher in CBD, and this one is lower. So you have price going up, CBD going down. When this type of reaction, when you have this type of div, and you see a break here, this for me sometimes, and usually I like to play this type of CBD plays, sometimes work when you see this type of plays, this type of CBDs is important. When you see this type of divs, here is your long trigger when it continues being bullish. And what happened from this div, when price got here, market order, break their own high, you have your momentum trade, and your invalidation is here. Then whatever you wanna hold this trade, whatever you wanna hold. But here you have your div. You wanna look. They were holding these divs. CBD reacted. Here you have a reaction, and when you come from a negative extended div, so here they were doing lower low, but here did a new high. Here was your div. So this high was better than this one. This with your CBD was your reaction, and if we close below here, I don't want to be long. So here was your reaction. This div was your reaction. When you go in, when you see momentum, when you see volume in the market, and this CBD also give you the momentum. So your invalidation is here, and you could target a 1 to 2. Okay? So CBD is really helpful for everybody trading this type of markets. You need to see extended CBD and also this type of deviation. When you see they're creating lows, CBD creating lows, and then they created in price a higher low without CBD. So CBD was here. Now it nuked. It did a CBD nuke, but price didn't nuke, couldn't break this level hold, this stacked imbalance hold. This deviation is the way you say, okay, this low is holding, but I have to wait. So in principle, when you see this type of low here, is your entry point. This one was 1, okay, because you have this div. This one was 1, but they equally retested again, and you see, oh my god, they get to this level and they couldn't break. So they are minus 7k contracts and they can't break this level. This type of candles here is something to take in consideration. This was New York Open 230. Okay, so they couldn't break. They had volume enough to do it. They did a new low on CBD, and price couldn't break. So you don't enter blindly here because this could nuke. But when price breaks this structure, you have your entry with your invalidation here or here, and then you just bet on price going higher, because you don't know, you never know, traders never know what price will do. You just react to what you're seeing. So you're seeing this type of diffs playing out. They're trying to go lower, is lower, but now price change in delivery different as CBD. So here you had a new low without price doing a new low. That is telling you CBD, they trying hard to push price lower. They're selling into a bullish diff. That's your entry. Okay, that's a bullish diff. Okay, so price trying to do a new low, CBD does a new low, but price doesn't. That's your entry long. Okay, so this is a great example for you guys. I'm gonna put, and then open interest following up here. This candle was your, but here you were late to the party because this pumped so hardly. So for me, entry is when you see these diffs on CBD and open interest is getting flat. It's getting to a level, it's not nuking like shit. Here is holding. When you see this, here you can see for longs. And it's 30-minute candles. So you have one candle, two candles, three candles. You could set market buy orders on this. You have time, 1, 2, 3, 1 hour and a half waiting here. You have time. You have a lot of time to see this. It's not fast, I'm late. No. Market shows you, okay, we cannot go down. We tried fast with volume. We couldn't break this level. They're holding here. Another leg down, it couldn't. And here for me is your trigger. This point here for me is your trigger. Invalidation under these wicks, that is the diffs for me. And this is your trigger when we break this candle. So here you put a market order buy. If you're trading on profile, whatever, 2 R, I always say for me 2 R is perfect. And here with this type of diffs, this plays really fast. So here you have example, pump into your price. You will have been in the trade half an hour, 1 hour, 1 hour and a half, 2 hours, 2 hours and a half for TP. Like a session waiting. It's enough. Your invalidation here is not so big. Okay? So sometimes these type of trades that are not so much leverage play better than trying to scalp the 5-minute and don't let CBD plays. Bitcoin is, I always say to my stream, Bitcoin is not a liquid and efficient market. So you need space. You need stops of 1K. You need stops of more than 500 in order to play out. But this type of plays these days in New York session, you need price to breathe. You could also argue that you could have this like here and stop in 1K and have more RR. But in order to be completely wrong, is that this extend diff, Bula diff, they break it in CBD. So if they break it because they go for these lows, if they break it and they go for these lows, and these lows are protected because these were shorts getting trapped and were puked out, that was also in your favor. If they went for these lows again, that was bad for your trade. So that's why my stop under these wicks. But you could argue that you could go stops underneath the wick of the opening of New York, and you would have more RR. Depends on you guys. But it's really important to see this type of diffs that play out. So the price going lower when you see price doing a lower high, lower upper low, and the diffs plays out, you wait, price creates a new one here, couldn't break this level, gives you the zone. When a candle breaks the first candle that get on the zone, you go in. That's what I do. Okay, so nice for watching. This was an educational stream. It was short. I just want to do a video and I'll upload these 2 videos I did. I hope you enjoy what you've seen here, and I will see